Hey everyone, wanted to drop a quick note in about the economy and the stock market and why things seem so out of whack right now. Now, if you're looking only at the stock market, you may think that the economy has basically recovered because after the 30% or so decline in March, the S&P 500 is now up on the year and up about 5% on the year. And if you look at things from an economic standpoint, well, it just doesn't look as good because you have jobless claims still way up, you have unemployment up over 10 or 11%, and you have GDP that has shrunk dramatically, which all in all has triggered one of the sharpest contractions in US history. So why has the stock market continued to perform well when the economy isn't doing so great or doesn't seem to be doing so great? So first, it's important to note that the stock market is not the economy. The stock market is what's known as forward-looking. So it basically takes in consideration all known information and projects that out into the future. And that's why it's really difficult to time markets if you're a market timer, because the stock markets are usually way ahead of what's actually happening in the economy because it's already digested what's happening and projected that out into the future. Now, the second part of this is it kind of goes off of an article written by Barry Ritholtz that came out in Bloomberg a couple weeks ago. And he talks about how the stock market and the economy is disconnected, potentially because of the performance of the indexes and the weighting of the indexes. And in the article, he explains that if you take the 10 largest tech stocks within the S&P 500 and weight them equally, as of this writing, they'd be up over 37% on the year. And then if you take the remaining 490 stocks, they're down about 7.7%. So that kind of shows you how if you just take a couple of stocks in the index, that can have a really big influence on the overall performance of the S&P 500. So simply put, these stocks that carry a larger weight in a market cap weighted index such as the S&P are going to have more impact on the performance of an index. And right now that just happens to be technology stocks. So it's important to remember that when you're looking at these indexes, they could be driven by just a couple of stocks in it, depending on what sector they're in and how that sector is performing. And then the other sectors aren't performing that well. And the economy is more than just a couple of sectors, or rather one or two sectors. The economy is all the sectors as a whole performing together. And that's what we need to look at. And that's why the economic experience for you and I seems a lot different when we're actually in the economy and experiencing things rather than looking at just the stock markets. So I hope that helps.